If you're a hotel manager, you know you're juggling a million things at once. Guest satisfaction, staffing, day-to-day operations, the list is endless. But the real story of your hotel's health, well, that's told in the numbers. So that's what we're going to get into. We are going to demystify the 3 core financial reports that once you really get them, can completely change how you run your entire hotel.
So here's our game plan. We're essentially giving your hotel a complete financial health checkup. We'll start with why these numbers are so critical, then we'll dive into the 3 main reports, and finally, we'll see how they all connect to give you the complete picture.
Look, running a hotel is tough. You're dealing with tight margins, and you've got all these different departments, from the front desk to F&B. Financial statements, they aren't just paperwork for the accountants. They are your strategic roadmap. I want you to think of these reports as a story. They're telling you the story of your hotel. You know those weekday promotions you're running? Are they actually bringing in profit? Is the new menu in the restaurant pulling its weight? These documents give you the hard data to answer questions just like that. And it's not just for you. This is how you confidently explain your performance to everyone, from your own team to the bank. So, let's get into the toolkit itself. There are 3 core statements, and each one gives you a totally different but equally vital view of your hotel's health. And when you put them all together, that's when you get a complete and accurate diagnosis.
All right, let's kick things off with the big one, the question every manager wants to know at the end of the month. Did we actually make any money? Well, the income statement, sometimes called the P&L, is exactly where you'll find that answer.
The idea here is actually pretty simple. It takes all your revenue from every single room, every meal, every event, and then it subtracts all your costs over that same period of time. That number at the very bottom, that tells you, plain and simple, if you came out ahead.
Now for hotels, this is where it gets really interesting, because not all revenue is created equal, right? Your room revenue, that's your high-margin powerhouse. That's the primary profit driver. But then you have food and beverage and events. They often have much lower margins, but they are absolutely crucial for bringing people in the door and shaping that amazing guest experience. The income statement lets you see exactly how much each part of your hotel is contributing to the bottom line.
And these are the terms that tell that story. You start at the top with your total revenue. Then you take out the direct cost of goods sold, so things like food for the restaurant or the drinks in the minibar. What's left is your gross profit. From there, you subtract all your other operating expenses, salaries, marketing, utilities, you name it, and you're finally left with your net income. That's it. That's the bottom line everyone's always talking about.
Okay, so if the income statement is like a movie of your hotel's performance over a month or a quarter, then the balance sheet is like a high-resolution photograph. It's a snapshot of your hotel's financial health at one specific moment in time. Put simply, the balance sheet lists everything your hotel owns, which we call assets, and everything it owes, which are liabilities. The difference between those two things is the owner's stake, or equity. So this isn't about profit, not really. This is all about financial stability and long-term health.
And it all comes down to this one simple, unbreakable rule of accounting. Assets must always equal liabilities plus equity. It has to balance. Why? Because everything the business owns had to be paid for somehow, either with borrowed money, which is a liability, or with the owner's own investment, which is equity.
So let's make this real. For a hotel, your assets are the big things like the building itself, your food and beverage inventory, and all that furniture, fixtures, and equipment, the FF&E. On the flip side, liabilities include your bank loans, but also, and this is so important in hospitality, guest prepayments. You know, when a guest pays for a wedding block 6 months in advance, that's cash in your bank, but you haven't technically earned it yet, so it's a liability.
And finally, we've got to check the hotel's circulatory system. A business can't survive without cash, and the cash flow statement is what tracks this lifeblood as it moves in and out of your operation. This report has one job and one job only, to follow the money. It doesn't care about accounting theories of profit. It just shows you the hard cash that actually came into your bank account and the hard cash that went out. It's the truest picture of the money you have on hand to actually run the business.
And it helpfully breaks all that cash movement into 3 buckets. First, operating activities. That's your day-to-day stuff, cash from guests, paying suppliers. Second, investing activities. This is for your big-ticket items, like buying new kitchen equipment or starting a lobby renovation. And third, financing activities, which is all about your loans, either taking new ones on or paying them down.
Now please, if you remember one thing, let it be this. This is the distinction that can make or break a business. Profit is an accounting concept. Cash is reality.
Your income statement can show a massive profit for the quarter, but if all that cash immediately went out the door to pay for a big renovation or a huge loan payment, you could still find yourself unable to make payroll. In hospitality, cash is absolutely king.
Okay, so now let's put all the pieces together for that complete diagnosis. Because looking at just one of these reports is like a doctor running only one test. You get a piece of the puzzle, sure, but you don't get the full picture of your patient's health.
This table really brings it home. Each report answers one critical question. The income statement asks, is the hotel profitable? The balance sheet asks, what's our financial position right now? Are we stable? And the cash flow statement asks, can we actually pay our bills and invest in the future? To manage your hotel effectively, you absolutely need to know the answer to all three.
So, what's the big takeaway here? It's that financial literacy is not just for the accounting department. It is a core leadership skill. When you understand these reports, it empowers you to make smarter, more strategic, and more confident decisions for every single part of your hotel every single day.
So the next time you get that stack of reports, just remember they're not just numbers on a page. They are telling you the real, unvarnished story of your business. The only question left is, are you ready to listen?